Welcome everyone to another episode of Daily Rates Live with the Mortgage Calculator. We are a licensed mortgage lender and broker in over 20 states with over 200 licensed loan officers that would be happy to help out anyone that wants a full breakdown, a full itemized loan estimate of any of these scenarios we go over today. But what we do every day, we review the rates in general, check out the actual live rates for our actual standard programs, and then we do a deep dive into a specific topic. Today, we'll be talking about our standard renovation loans for a primary home. So we'll be talking conventional, FHA, VA, and just comparing them a little bit. Definitely some unique options, especially as today and just recently we've had some great news. Rates are dropping, heading in the right direction. So all of our borrowers out there looking for a new home, looking for inventory, renovation loan is definitely a great tool so that you can purchase a property that may need a little bit of fixing up and make that into your dream home if you're not able to quite afford or find that exact home. So renovation loans give our borrowers out there a lot of flexibility. Now let me go ahead and switch my screen and we'll go into today's live rates. So as we do every day, we want to check out the general market, and today definitely a lot of news. And this is the last 5 days of the 10-year Treasury. So the 10-year yield typically one of the best indicators of rates overall, especially when we're talking about all kinds of different loan programs, non-QM, QM, government, all kinds of different options here that we're going over. And in general, rates are going to typically trend with the 10-year Treasury. So a lot of ups, a lot of downs throughout the days. But I always want to put this into perspective. We're still pretty much at 1-year lows for all these options. And due to some changes in the mortgage markets, we actually are actually at, I believe it was 3 years lows the last time we checked here. So great time to be out there shopping. Don't get too much into the day-to-day politics. It will go up, it will go down, but overall, we're going down overall. Now, let's get into our standard programs. So let me zoom in a touch here. For all of our standard loan programs, we set up a basic scenario so we can compare across all the options here instantly. We set up a standard single-family home, 500,000 purchase price, 300,000 loan amount, 60% loan to value. We use a 760 estimated FICO credit score, and estimated 40% debt to income ratio. That way we can instantly compare across all these options. And today is pretty amazing. We were hoping to see some 4% on the board here today, but still pretty amazing. Everything has gone down pretty dramatically over the last week or so. So our first option here, our standard conventional option for a primary home, what you typically think of when you think of a mortgage. Coming in today, 5.5, lowest rate options, final APR there with all the fees included there, 5.766. Now, if our customer doesn't qualify for conventional for any reason, FHA allows more leniency on credit type of issues and a much higher debt to income ratio overall. FHA today coming in at rates as low as 5%, but with all the fees included, FHA does require upfront and yearly mortgage insurance. The final APR comes in 5.894, just a touch above conventional, which is pretty typical when you compare side by side. Now for our VA eligible borrowers, VA programs are pretty amazing. Rates today as low as 5.125. Hopefully we, again, continue to see that go down throughout the day. Final APR with the fees, 5.362. Much lower than conventional and FHA when you compare side by side. So definitely VA is typically the best option for our eligible borrowers, our vets and active service members and surviving spouses. And next up is our USDA options coming in today as low as 5% flat there. Final APR 5.652. And just remember, USDA is only for those properties in USDA eligible areas, those rural areas of the country. And we'll typically compare those for our borrowers looking in those areas to FHA and conventional. You see here, USDA is a touch cheaper if our borrower and property qualifies. So great option to consider. And now, pretty amazing. I'm pretty excited about this. Our non-QM alt-doc options. So these are where we start to offer our unique flexibility here at the Mortgage Calculator. Definitely something we love to use our alternative docs if our customer, for example, is a self-employed borrower, may have trouble qualifying conventional, FHA, etc. with standard documentation and needs to use alternative docs such as bank statements, 1099s, asset-related, P&L statements, all kinds of different options we have here to use alternative docs and our non-QM options. So for a primary home, we can get as low as 5.875. It's been quite a while since we've got under 6, which is pretty amazing. Final APR with the fees here, 6.145. So just a touch more expensive than conventional, which is typical to switch over to use alternative docs. And we can use those alt docs, bank statements, etc. for investment properties as well. Rates today coming in for that 6%, final APR 6.321. And we compare that to our conventional options for investment properties, 6% rate, same there, and just a touch cheaper, 6.311 on the APR. And hopefully these drop as well. DSCR typically doesn't change day by day, but with the markets going lower, hopefully we see some more action here. DSCR, one of our favorite options, debt service coverage ratio, no income or employment needed. Simply use the estimated rents to determine if the property cash flows on a monthly basis. If the property does, that's a ratio over 1, which is what we use here. And with a 3-year prepayment penalty, these options for investment properties are pretty amazing. 5.999 today, final APR 6.222, which is beating conventional. And alt doc options when we add that prepay. And we can add a 5-year prepay to make it even lower. Rates as low as 5.875, final APR 6.181. And there are options for no prepayment penalty there with the DSCR. Rates as low as 6%, final APR 6.321, very comparable to conventional. And we do have our second mortgages and dozens of other programs here. If you need a quote, please reach out to any of our team members or drop a comment there, and we'd be happy to help you out. But let's get into today's topic. So today's topic, we're going to be comparing our standard primary occupancy, a borrower looking to buy a new primary home, and again, may not be able to find that exact home they want, and would like to do a renovation loan option. So I had to find a property here that perhaps needed a little bit of work, but you don't always want a ton of work. So this is a pretty good option to look at. So I found a very small home in the nearby neighborhood, and it's a little bit older style. Definitely could use some updates, but I don't think there's anything major wrong. It's not missing a roof or anything crazy, but definitely could use some updates, but a lot of great potential. It's right in a great area. And perhaps our borrower needs another bedroom for their family, but this would be a great option because it allows them to purchase in their price point. Once you get to 3-4 bedroom homes in this area, you start to get over $1 million. So this is a great option, keeping the total project pretty low overall and allowing us to get some nice quotes here for our new conventional FHA and VA options for rehab loans. So first up here, if we want to purchase this property, what we used for an estimate was the full purchase price, $599, and we estimated that we would need to put $100,000 into repairs if we want to perhaps add a room, and that would be a total project price of $699, $700,000. And we also assumed that perhaps if we did those repairs, we would have an after repair value of $750,000. So you'll see those in the notes here, but I just wanted to go over that real quick. So first up, our conventional option. Let me zoom in a touch. And conventional for a standard rehab loan without necessarily being a first-time home buyer, we're at 5% down. And it's pretty simple here. We don't need to do any fancy math. We just have some assumptions that we're going to do $100,000 worth of renovations, and that results in a final cost of $699. And we need an after repair value of at least $699. Because we do have a limit there, we can only finance 95% of the after repair or the purchase price plus repairs, whichever is lower. So remember, we can't gain money from doing this loan, but of course we can finance up to 95% of the costs or 95% of the ARV. Sometimes we do need to change the scope of work if the numbers don't work out. But in this case, the numbers worked out. If we had an after repair value of $750, that's great. The borrower is still going to need to put down 5% of the total cost, the $699 here in this example. They must contribute 5% of that in this example. But of course, if they finish the renovation, they're going to be walking into a home worth $750,000, walking into $50,000 worth of equity, of course, plus the 5% that they've already contributed. So these are great options for our borrowers, again, that may not be able to find that perfect example and want to make it theirs and can get a little bit of flexibility here. So rate options, rates as low as 6%, costing 2.375 discount points. And we do have a par rate option here of 7.125. So rates are a little bit higher than your standard conventional options to add the renovation portion, but definitely a great option. This option works for both the Fannie Mae home style and the Freddie Mac choice renovation. So both options are there. And this was over the limited option. So all of them do have a smaller option. FHA conventional do have a smaller limited option, but this one exceeded that because it was a pretty large renovation. But you can see here we're only going to put 5% down of the total project price, and a pretty simple layout. Keep in mind the PMI, mortgage monthly mortgage insurance here, 177, because we do have a strong FICO score, which we use for all of our demos here, of 760. Now, when we compare that to FHA, definitely keep that in mind that FHA has a fixed rate. This quote is pretty strong because we have a very strong credit profile. Now, if we need to switch over to FHA's program is called 203K. This is the standard full version. There is a limited version if the budget is under a certain amount, but in this case, we're going for a large budget again. And FHA, the biggest difference here is we can go 3.5% down, a little bit more restrictive on the type of inspector and such. But 203K is still a great option and affords us all the flexibility that standard FHA programs come with, as far as if a borrower needs flexibility with credit, flexibility with debt to income ratios, etc. Notes are pretty much the same here, same project, same scope. We just have to go with 96.5% of the purchase price for the ARV, and that's because the borrower must contribute that 3.5%, pretty standard for FHA. Now our rate choices here, 5.375, lowest rate option, 2.315 discount points of cost there, and there is an option here with a little bit of lender credit, 6.5% rate, affords us a touch of lender credits back towards our closing costs, and slightly lower down payment here, that 3.5% down, but there is that additional fee here because we have a final loan amount that includes our upfront mortgage insurance and is financed into the loan. So definitely lower upfront costs, but a little bit higher loan amount overall here. And notice the monthly mortgage insurance is going to be a fixed 309. Now, if our borrower has a very low FICO score, the PMI on a standard conventional might be much higher than that 309. But in this case, at that 760, our borrower is not actually saving any money by going with the FHA standard fixed mortgage insurance rates that it has. But if our borrower does have a lower credit profile, definitely keeping that standard fixed 309 on this type of loan amount definitely could help them out. And our final option for our VA eligible borrowers here, we do have our VA renovation option here. Again, same assumptions. VA does allow 0% down, so we can still do this loan with getting a full standard 0% down, 100% financing here. But of course, it's still going to be based on the ARV or 100% of the purchase price plus repairs. And for this option, VA as low as 5.5% rate at discount point cost of 2.517. And there isn't a par rate option because it's a pretty unique renovation loan, 6.125 rate at 1.267 discount points and cost there. And again, that allows us to finance 100% here. And we did put the standard funding fee. So there is going to be a little bit higher loan amount overall. And that is our basic rundown of the renovation options. Again, we can finance most of your standard repair items. Some of these programs are a little bit limited on items that aren't necessarily needed to bring the property into a state of renovation. Sometimes like pools, kind of a big luxury item. But they are eligible for some of the options, but not all the options. So definitely let our teammates know what kind of project you're working on, and we'd be happy to send that quote over. Don't see any questions there in the chat. Again, if you have any questions on any of those programs or want to get a deep dive, a full rate quote with a full loan estimate on one of our renovation loan options, please get with one of our team members. They'd be happy to send that over. So thanks everybody for joining us. We'll be back later this week with another episode of Daily Rates Live. Have a great day, everybody. Remember, rates are dropping.